We've turned really, really positive on the economy. And frankly, we have now for some time since the fall of last year. We've been looking for pretty strong growth this year and just increasingly have become more convinced of it. And as you noted, we're now looking for 7% GDP growth this year, 4.5% unemployment rate by the end of the year. And there's a key reason why. It's the consumer. The data that we're tracking on the consumer is extraordinarily positive. And we think we're on the cusp of seeing very significant gains in consumer spending for the month of March.
Yeah, we showed a little a graphic with a lot of words, but forget about, we don't want to read at 5:50. Why don't you tell us what it says? What is your credit card data showing you?
Yeah, so that's exactly right. We are monitoring aggregated spend on Bank of America credit and debit card data, which is an incredible resource to understand the turning points in the consumer in real time. And what it shows is that March was a very strong month. So the first 2 weeks of the month showed an acceleration of spending quite nicely. And then the most recent data, which includes the period that stimulus checks were distributed, shows extraordinary spending, particularly for lower income consumers. And they're spending across the board. I mean, we saw impressive gains in furniture spending, online, electronics, things that people were worried demand would have been exhausted for, still out spending. Clothing picked up quite nicely as well. That's probably more a function of people, perhaps going back out, the reopening story starting to play in. And then there's restaurant, there's travel. So then there's the broader spending that's also happening upon reopening. And that's the next real leg for consumer spending, right? Now it's the stimulus funds, they're being pumped in. But as we look ahead, as the economy reopens more broadly, given the conversation you were just having in terms of people going back out to restaurants and the like, that's going to then accelerate the economy.
So we are, yeah, it's, we unfortunately did a segment a couple days ago, Michelle, on how much weight a lot of people have gained under the lockdowns, and maybe they need some new clothes to go with it. But you are seeing a direct tie between stimulus check announcements and direct spending, it sounds like.
Absolutely. Yeah. I mean, it's a lot of cash that is pouring into the economy. And you could debate the marginal propensity to spend out of it. There's a lot of questions of how much is put into savings to pay down debt, to be spent, but just the dollar amount is so significant for those that are receiving the stimulus checks, particularly because they are lower income, they're more budget constrained, and they're spending the money.
Shepard Smith here. Thanks for watching CNBC on YouTube.